Okay, so we wait a little bit, as somebody said that it's when the stream starts, it's like usually we start talking and then the live doesn't start, so like we kind of come in the middle. So yes, please let us know in the comments if you can hear us, see us. We have Scotto with us today and Sir Matt Money, and this is the Q1 earnings aftermath of Rocket Lab on Rocket Lab Weekly. So how is everyone doing this week?
Well, pretty good. It's been a very busy week. I think I had 5 or 6 companies that I hold all report within like a 3-day span, and then we have Redwire on Monday as well. So, or I think it's Monday or Tuesday, but too much at once. Yeah, but overall really good. Largely led by EOS Energy and Black Sky. They're both up like 30% on the week or something crazy. And then you have Rocket Lab to balance that out. So, how about you guys?
Phenomenal earnings calls for me. I think Palantir did really well. Dutch Bros did phenomenally. Next Decade also reported it's an LNG company I invest in, and obviously Rocket Lab I thought was a phenomenal earnings call, regardless of what the stock price did on Friday. I think we're getting closer and closer, and I'm sure we'll get more into it as the conversation progresses here. But bought more as always, so it's always a great week when I'm able to buy more Rocket Lab.
We all need to be more like Matt. I keep coming to this conclusion. The simplest way of investing is you just buy every week, and it's actually so crazy. I just want to say that technically you can do better on the stock market with a 10% return if you can send $100,000 every year to your portfolio than if you do like a 70% unbelievable return on like $10,000. It's like crazy when you understand that. It's yeah, because so many people have the tendency to like milk the percentages and like try to do options and calls and blah blah blah, and then you would actually do better to take that time and just work more at your job, or like find more way to have income, or take away the credit card from your wife, and then your returns are so cool. So this is Rocket Lab Weekly, episode 84. We are a few days after Rocket Lab earnings. We are a few days before an interview with 2 secret people. I think you guys have never seen us interview them before. It's going to be a total surprise. So let us know in the comments, what is your guys' vibe? How do you think the earnings call went? And what are you interested what would you like us to ask these 2 secret people? And in the meantime, we can go through. Let me see which order is the best to go through. There was a tiny little bit of news, so maybe we go through that, and then we go through the earnings and what we thought. And I try to keep an eye on the comments. Cool. So the first week is Rocket Lab has been totally irresponsible. And here you can see, can you see my screen?
Oh, changed. Yeah, all good now.
Okay, good. So let's play this video again. So as you guys can see, Rocket Lab has used all the available water on Wallops for this PR stunt just to prove this short report wrong, and prove that there is water on Wallops. So now the news is, my sources tell me that there's no water left for the actual Neutron launch, because they were just trying to pump the stock. So what do you guys think about this occurrence?
I mean, cool. Yeah, par for the course. Good to see.
Yeah, I had no doubt. Just to be blunt, and I like to see the fact that we're getting closer and closer. Based off the earnings call, it made it seem like we're very close to being able to hit the check mark in the green on this particular milestone. So to me, I don't know what else is necessary. Maybe testing of the fuel pumps, or testing of the the actual storage facilities that are literally on site. But this, to me, seems like at least the launching capability is up and ready. The stand itself is up and ready. So I'm sure we'll find out more once we get a full video. But I know we have plenty of other videos to go through as well.
Yeah, it's so funny because like if you look at the videos, so as you said, like we see now the launch infrastructure. We know that the stage 2 is qualified, whatever that means, and we see a huge part of stage 1 that is also like up and assembled, and so it's only now the engines, and I don't know what you call that part of the rocket, like the engine bay, or like the stage 2 tank and engines. Like that's the only one we don't have picture evidence on that they are. I'm pretty sure they're working on it, but we don't know.
So yeah, there's the static testing, meaning that everything's all kind of integrated, right? And that from a pressure standpoint, that the pressure is expected to be observed. Obviously, you can't do it in a vacuum like you would in, say, space, but at least from an internal pressure perspective, you can test the static pressures to make sure that it meets the specified design qualifications, right? And by no means a rocket engineer or scientist by any means, but I deal with this a lot when it comes to the petroleum industry. You have static things and you have dynamic things. Obviously, what I think still needs to happen for stage 1 and stage 2 is the actual dynamic movements of those testing. So that's the firing of the actual engines connected to these vessels. And so, yes, I still think that there's a lot going on. As you can see, this isn't a full stage 1. I think it's probably maybe a half or maybe even a third of it. So this looks to be the top with the actual nose cone as well. So I'm assuming that there's other pieces that need to be put on and tested, but I'm assuming that they're just getting this part qualified. Specifically the integration of the nose cone piece with the stage 1, because previously the nose cone itself, the opening and closing, I think was kind of qualified and tested, but having it being actually integrated with stage 1 is a positive in the right direction.
All right. So apparently Rocket Lab has just tweeted something. Did you guys see that? There was somebody who commented that. Okay, I can put it on the screen. I don't know how.
I sent it to you in a. Oh yeah, got it. Yeah, perfect.
Yeah.
Yeah, so W3, that's coming back to Earth in the next few days, it looks like. That's the one that took off March 14th. So give or take about a month in between departure and touchdown. So that's good to see. And that was pretty much on par with Winnebago 2 as well. Kind of a month for the full mission, and much better than the first one where they had those re-entry issues where it took like 8 months to come back down. So it's good to see that they're on a much better timeline. It's good to see.
Yeah. Okay, we got a question here. Can you say what you think about the sell-off? Is it institutional or retail, or is the stock overvalued in your opinion? Okay, I go ahead and answer this first. So I'm currently happy for a sell-off because I want to accumulate more shares. I do think that I do think that the earnings report was really, really good, and we will go into the numbers in a bit. And I think that these are my favorite kind of sell-offs when you have good news and the company is doing good, but it's not maybe as good as the market was imagining it would be, and then it becomes like an irrational sell-off. And I don't care who's selling or who's buying. The only important question is, are you buying? But I don't know. What do you guys think?
You want me to go first, boss man?
Hit it.
For sure. So value is in the eye of the beholder. And so you could have 18 different people and ask them what they think. And several people that would think that Rocket Lab is not even an investable company. And in fact, I still deal with that. And a lot of people that I discuss with on a regular basis, Chris Patel, Amit, Steven Fiorillo, a lot of those guys are just like, nope, not for me. And that's understandable, right? You have to invest in what you're comfortable in. And then you have people that are really trying to judge the company on a quarter by quarter basis. And then you have people like myself that are looking at the long-term vision. I look at these earnings calls as check-ins. Is the company continuing to move in the right direction? Is it making a pivot, something that could be positive or negative in terms of pivot? Everything I've dealt with so far when it comes to Rocket Lab in terms of a pivot, initially I have a scared reaction, and then eventually I digest it and recognize these guys are way smarter than I am when it comes to rockets and when it comes to going to space and putting things into space and having satellites in space. I should probably listen, and oftentimes I do. And I recognize that my initial reaction was emotional, and I should be more logical about it. You have to understand where you fit in that spectrum. If you're looking at the company today without incorporating any of its future potential, like the constellation, like Neutron, you're obviously going to value the company to say it's not producing a profit, they're diluting shareholders, they're burning through $30 to $50 million cash per quarter. And so therefore it's a garbage business, and it's eventually going to go to zero. And you would be right if you looked at it from that perspective. And I don't, if that's the kind of companies that you like to invest in, then that's fine. But if you look at it that way, in my opinion, you'll be missing out on the potential of something that is going to be a $50 to $100 billion company from what we know today, in my opinion. There obviously could be different things that come out with respect to the satellites, the Rocket Lab owned constellations that could push it north of that. Obviously, we've seen other companies now valued at over $300 billion, namely SpaceX, that are kind of in the same space, that are obviously ahead of Rocket Lab. But obviously, Rocket Lab has noted that they're trying to emulate the beauty and success that SpaceX has done. So I'm not saying Rocket Lab is going to get to $300 billion, but you have to say, where in between do you think the company is going? And I think a lot of times people put quarterly earnings on a pedestal. To me, I think it's a check-in. It's an opportunity to look at, get a glance into the company. But at the end of the day, you have to realize, what are you investing for? Are you making quarterly options trades? Then, of course, the quarterly numbers make more importance to you. But if you're looking at it like me, who's investing for, or not potentially even looking to sell a single share over the next 10 years, a quarterly earnings call, unless something drastic happens, isn't really going to change my perspective. And I'm with Vince. I prefer that we actually have a continued delay of Neutron. People get scared. They think that, Rocket Lab is going to zero, and we trade below $20 again. I would love to continue to accumulate shares of this beautiful company, and everyone wants to kind of rule it out. But I'm very confident that we'll still see a launch before the end of the year.
Mm-hmm. Yeah, I don't have too much to add. I think, Matt, you said it very well. I just kind of keep just kind of scrolling through X yesterday. I kept seeing, like, why is everybody selling? Why is everybody selling? But I'm more curious, like, what would it have taken for people to not sell? Because like just that, it's like, I'm not sure what people were expecting from earnings. Like, maybe this is just algorithm trading, or maybe this is like whatever else. I don't know. But like, I don't think anybody is buying or selling based on Q1's earnings or loss, if you will, or whatever you want to call that. But then even if you like kind of go forward, it's like by pretty much every metric throughout the year, things are only going to get better. And then if you look into 2026, it just expounds from there. So I'm just, like I said, just kind of left with, like, what would it have taken to not have a sell-off? Because I listened to the call again this morning, and I'm like, that was a good call. It was great guidance. 8 electrons signed within Q1, another neutron signed within during Q2. We had easily top 5 in terms of bookings during the quarter, and just, I don't know, just across the board, I'm just kind of like, what caused this sell-off? It's kind of,
I honestly
what
think
were people hoping for?
Yeah, I honestly think the sell-off was caused by the backlog not growing, and the neutron. I feel that you didn't get, like, they're still saying that it's a tough schedule. It's so like I would say that it's the backlog not growing, and potential further delays with the neutron.
Fair,
But
but I mean, even the Neutron, it was because we're always so like zoomed in. We're like, is it on the pad in 2025, or are they launching? And they're saying launching still. So I'm like, it
yeah,
was no delay. I don't know.
yeah, and
Just
and
across the board, I'm like, that was a solid earnings call. Like everything's
and
looking
again,
good.
for long-term investors, like, I don't think that if you look into 2030, like, so Neutron is planning to scale, like 1 this year, 3 next year, 5 the year after. We don't know what happens, but it should follow Electron, right?
Mhm.
So if you look in 2030, so like, where are they going to be on the cumulative launches of neutrons, if they launch now in September or October or November or even December? Like, they're probably still going to be in the same place. And so that means that this delay on neutron is completely irrelevant when you look into the long term. You actually want them to maybe delay a little bit and get the job done perfectly, and not have the rocket blow up, and as also Sir Peter Beck said in our interview, that they don't mass manufacture rockets that don't fly, that then they have to go back and like have a fleet of bad rockets. So it's actually, like, on the long term, it's better that they do it the Peter Beck way, and maybe wait a little bit. And then if the market reacts adversely to this, I think it's like a fantastic buying opportunity. Same with the backlog. I think it's a huge misunderstanding, because as I said also on the earnings call, that the company is growing, right? So the backlog staying the same. It's actually like the backlog growing by 30%, but you're delivering like your growth. So like the backlog stays the same. That's number one. And then number two is Rocket Lab has this, I don't know if they're the only one, but they're like a no PR company, right? And then they're only recording in their backlog what is actually ordered by the customers on a what do you call it? Like, where the customers cannot back out of it anymore. So it's not letter of intent. It's not, handshake. We're going to order. You guys remember what happened to Nikola, the electric truck company, that it turned out that they had 5,000 pre-orders, and they were done like on a letter of intent with like a $1,000 deposit or less than that. So when they report, backlog, that is actual ordered backlog that the customers cannot back out of. But what happened in this quarter? They sold Neutron to the US Air Force. They got accepted to the NSSL program. That's a 5.6 or multi-billion-dollar contract. They got accepted into a UK HASTE program, which is also like a 1 billion contract. And we know that they're going to get contracts from there. It's just they cannot yet record it in their backlog because of their own rules. So for me, when you see these bullish things and then the stock falls, it's like, what better can you ask for as a long-term investor if you're accumulating? If you're trying to retire next year, it sucks, but I think if you're trying to retire next year, you shouldn't be in Rocket Lab.
And because I do see a question, Curtis is asking about the number of Neutron launches, like to touch on what you're saying, Vince. And not that this model is like the end all be all, but this does more or less track Electron's cadence. So by the end of 2030, we're looking at 16 launches within the year, and we're looking at 44 launches having been done by the end of 2030. So to put that into terms of revenue, launch services revenue for the full year of 2030. Sorry, I meant to mention the Electron stagnated at 24 launches per year. Obviously, there's probably room for a bit of growth, but that is also going to be kind of moved to the Neutron, I'd imagine. Some of what would be Electron would just be like a ride share on Neutron. So again, 16 launches in 2030 and 24 Electron launches in 2030 as well. That's going to be $1.2 billion in revenue. So there's plenty of room to grow. And for reference, what was 24 as a whole? 125 million. So more than 10x in revenue, pretty much a 10x in revenue from 2024 to 2030. And the other point that to add to, Vince, is like you mentioned the UK stuff. I'm willing to, like, guaranteed the whole, or one of the reasons that Rocket Lab is pivoting to being Rocket Lab Corporation is probably a bunch of legal technicalities, including not being able to add customer X, Y, and Z because we're not the proper legal entity. But as soon as this happens, aka June 1st, it's going to just be like, between all the contracts that you listed, Vince, and between everything that's going to happen, it's just like, buckle up, because the amount of backlog, like, everybody's scared about the backlog slowing down in Q1. Like, get ready for the second half of the year. It's going to get crazy.
And adding on that, like you said, I think a lot of it is corporate jargon, right? And
100%.
if you look, and if anybody works for a big conglomerate like I work for UDoc, you'll notice that when you sign certain FMs, financial memorandums, or you sign certain agreements, it'll be signed and you're like, that's the name of our company? Like, it'll be specifically for UDoc, it'll be UDoc Gulf of Mexico LLC, or it'll be UDoc India LLC. And so all of that underneath what they call the group. And so I anticipate what eventually you're going to be, and we already know that Rocket Lab has some of these. You'll have Rocket Lab Defense LLC. You'll have Rocket Lab USA still be an LLC. That some of these contracts that are signed will still be signed under. But what I'm envisioning is now you have this mothership company that is now going to be Rocket Lab Corporation, that you can put Rocket Lab UK LLC. You can put Rocket Lab Europe. You could put Rocket Lab Minoric LLC. Hell, I've worked with some companies in the past that still operate under previous acquisitions. So a prime example of this, and maybe I should or should not say this, so sue me. But I work extensively with Occidental Petroleum in the Gulf of Mexico, and they still operate majority of the time under Anadarko. They had acquired Anadarko back in 2018, 2019, and they still operate under the Anadarko brand. So you'll see, like, they sign things off as Anadarko still, even though they've been fully incorporated into Occidental for 6-7 years. And so a lot of it, like you said, Scott, I think is this corporate and legal, bookkeeping, basically.
Mm-hmm, mm-hmm.
Yeah, exactly. Well said by everyone. So let's go back to the last piece of news that I wanted to take up, and that is that we have a new launch announcement. It's the first one this quarter, and I don't know why. It seems like that they take it very easy on the on the first month of the quarter, and then it goes into like a panic mode, like, oh my God, we need to have launches this quarter. Yeah, who can we get on the pad? And then we have like boom, 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 boom. We're just shooting out rockets. So does anybody have the current lineup for Q2 for launches?
I think we're looking at 5. So
5.
in the last video that I put out, I said that there would be 4, and that was just kind of comfortable based on the current manifest. But without over explaining, I'm now under the impression that there's going to be 5, and the reason for that is I think these IQPS launches are going to happen in quicker succession than we previously thought. So I think we're looking at I'll bring it up here. 2 IQPS within the quarter. 1 Hawkeye, 1 Capella, and 1 Black Sky. I think that's going to be our lineup for the quarter. And then it's even, if you want to look ahead to the second half of the year, there's going to be more launches in the second half than the first half. So I think that we're looking at probably at least 6 per quarter for Q3 and Q4. So I think we're in a really healthy spot that's lining us up for, I think, 22 launches for the year as a whole. And the ball's really starting to roll.
Awesome. Sir Matt, anything to add here?
Let me just share something really quick. So, Scott, I know you have a comparable spreadsheet, so I'm not trying to devalue what you put up because it's always really good. But I just wanted to kind of share where we're at in terms of launch cadence and everything of the like. So, give people some thoughts. How do I hide some of this stuff? Not that it's important, but just so that
you could maybe just zoom in on the one that you have, and then it disappears by itself.
There we go. That helps. Okay. So as we all know, we're all racing to 100 launches. Year plus 8, which is the year that we're currently on, is kind of all projection. So right now we're obviously ahead of the Falcon 9 by about a year's time. And at the moment, I'm kind of projecting that we'll get to about 21 or 22 launches for this year, particularly. But not necessarily the reason why I wanted to share this. I actually wanted to share this graphic a little bit more, if it'll let me. Maybe I'll just expand this instead. This is the days per launch, days between launch, rather, since we started. And so the blue is the actual data, the actual launches themselves. You can see some we've had very quick turnarounds where they're basically within the same day. Some have taken a day or two. But this most recent, I guess, if we do launch on the 17th of May, it'll be 50 days. But you can still see we're still not necessarily dragging too much up in terms of the last 5 launches. And so my anticipation is, if Scott's right here, we'll have 5-6 launches within about a month and a half. And so the likelihood of average days between launch will continue this trend downwards. As we see, this is logarithmic. So this is days between launch here. This is days since the first launch. We kind of go through these periods where we obviously accelerate in terms of the amount of time between launches. And I anticipate we're going to probably hit some sort of asymptote about between 10 days, just being the fact that we're going to probably launch 24 to 30 times per year. And so we'll probably eventually hit this place where we've been averaging for the past however many launches at this point, close to 20 days average between launch. And my anticipation is we're going to eventually start to accelerate closer down towards the 10 range. I'm sure we might hit a point where we actually get to 15. And so I might have to remake this graphic because we've started to lump up now towards about 40 to 20 to 40 launches. So it might actually be useful to potentially focus more specifically on the last year and a half, rather than since all the way back in 2017. But overall, I think within the next few years, we'll definitely see this trend down towards 10, and it'll probably stay there, with obviously some being done in quick succession, 1-2 days, specifically if we start to add on things like the UK and places around globally where we have to obviously start to track. But just want to always share that. I think people always are like, oh my God, this is so long. It's been forever. And in reality, it's not been that long. It comes in waves.
When the emotions kick in, data is your friend, said Dave Ramsey, I think once or twice. Or yeah. So completely agree with you. Whenever you feel like, oh my God, it's been so long, just look at the table, look at the trend, and you will feel good. And it's a perfect segue into what I actually was trying to, or the next point that I want to make about the earnings. Sorry, guys, you all had this super nice and professional tables. I will have this unprofessional one, but I hope it still serves the purpose. So this is my own little valuation model. I plugged in the numbers. And I did notice.
Sorry to interrupt. Just double check the screen there. Could be me. I'm not seeing anything.
Thank you for tech support. Yeah,
there we go.
So here it is. Here it is. Okay, good. So back to what I was saying. So here you can see the quarterly growth. Here you can. Sorry, this is the yearly growth. This is the quarterly growth. This is the total revenue of the company by quarter, and this is the graph of the total revenue. You can see it's collapsing, going to zero very soon. What was really interesting in this quarter is that this is the gross margin and the non-GAAP gross margin. And if you look through the numbers, there has only been here, which I think was a freak something in Q4 2021, where you had a higher gross margin and GAAP margin, and they're guiding that it's going to go even higher. So this was for me like a humongous green flag, because we're in the middle of developing Neutron, and it's really not that we're risking the company on Neutron, and if that doesn't happen, we are going down. Like, we actually have a very healthy business that is doing better and better, and the margins are going higher and higher. Then I wanted to show the adjusted EBITDA margin, which is called bullshit numbers by Warren Buffett. Basically, what it means is that there is certain expenses that are in the bookkeeping, like, for example, stock-based compensation that is not a cash expense for the company. However, it's a real cost to the company, but they don't pay it out in cash. So each company does this a little bit differently, how they calculate the adjusted EBITDA. But if you just think about like the cash base of the company, you can see that compared to the revenue, I even have it charted here, the adjusted EBITDA margin, that the margin keeps going up. Again, this is while we're building new launch sites, we're spending R&D on Neutron, yada, yada, yada. So that's a humongous green flag for the company. And this tracks the stock dilution. They are estimating in Q2 we're going to have 514 million shares. That's a 3.5% year-over-year dilution. I didn't manage to check the Q1 number because it's from the 10K, but I believe that they guided for this, and that was a 3.29% increase. So the stock-based compensation is increasing a little bit if you look at the trend. But it's at a very, very, very low level compared to the companies that I usually look at. So my take on earnings is that it was like the underlying numbers are fantastic. The company is doing insanely good. And when the market dips on these earnings, it's like God is giving you a gift. So now I want to let you guys talk about the earnings and the numbers that you guys saw on this.
You want to go ahead, Matt?
Sure. Yeah. The thing that I was, I think one of the things that might have brought the earnings down a little bit in terms of why the stock might have sold off is probably one of these key pieces. I actually didn't think, looking into the numbers, I didn't think it was that bad. So as Vince alluded to, there was a little bit of dilution in the quarter. That's inevitable. Obviously, some of that happens from share-based compensation, but the company also hit the ATM, the at-the-money market, basically over-the-counter market to basically issue some shares, and sold those to get about $90 million worth of capital. That's why actually the cash on hand actually increased, even though we lost about $20 to $30 million in terms of ops cash, if that makes sense. And actually it was more than that because of the SDA. It was like closer to 50 or 60 billion. Million. I'm used to saying billion. Sorry. The thing that I wanted to highlight, and I think that this is what caught it, I think we sold like 4.5 or 4.8 million shares, of which we ended up getting proceeds of around $90 million, which actually is really good. It shows that we're actually getting some pretty decent value for those shares, and it allows them to kind of hit the ATM. So of that, at the moment, to give people some context, in the first quarter or sometime, they basically authorized the ability to issue up to, I don't know how many shares, but it was basically to capture about $1 billion worth of shares that they can basically sell. And with that, they executed about 9% of that. And I think a lot of that is to get ourselves the opportunity to not necessarily have to go to banks or anything like that to do convertible notes or anything like that, as we've seen in the past. I think it's more so that now we can just issue shares. And eventually, I think it's going to be a short-term pain for long-term gain. I think we obviously are in a cash crunch with getting the SDA contract. That was obviously a $50 million expense or so in the quarter that we basically had to upfront, but I think in the back end, obviously we'll reap the rewards of that when we start to recognize a lot of that revenue coming through. And then once we get to a place where in say 5-10 years time, if we're not going to continue to have a huge capital expenditure associated with R&D, then I'm anticipating we'll be able to offset the share count in the future. So while it sucks in the short term to have a little bit of dilution, as you noted, it was 3%, in the quarter. It I think it's allowing the company to operate consistently, and it's allowing them to not necessarily have to do it a much larger. I think that if some company wanted to be involved, you might have to do it for, say, 300, 400 million. This allows the company to digest it on a quarterly basis. And not only that, but they don't have to take this big tranche of capital up front. They can more so do it at pace. And so anyway, that may have been part of the reason why the stock sold off. But to me, selling it off for 3% dilution, even though that some of that was share-based compensation, doesn't warrant a 12% sell-off. So,
I mean, you guys covered most of kind of what I was thinking as well. But to kind of echo what I was saying a little earlier too, just in terms of like what caused the sell-off, and like, did I hear the same call as everyone else? Because I don't know how many times in the call they outlined, like, so launch, I mean, we already know this. The more launches that you have within the quarter, the better off it's going to be, because it doesn't matter how many launches go off. You still need to pay for that launch pad, right? So that's kind of like a baked-in cost. And that's just one example. There's many things. You still have to pay the staff, whether the launches are leaving the Earth or not. So not only is there going to be lower cost per electron, but we're also flushing out those older electron launches. Like Kinéis is a good example. The 2 Kinéis launches that went off in Q1, those combined were, I think, 13 million. So it's like if you compare that to like I think it's $8.6 million per launch that we signed this quarter. So not only is the cost for the launches going down, but the revenue per launch is going up. And not only do we see that, like, that surprise, it wasn't like a crazy beat. Guidance was for 25 to 27% for gross margin. We saw 29%. That margin is going to get better, not only for launch, but we are still continuing to flush out the old Solero contracts, for example. So Space Systems revenue, or Space Systems margins, I mean, is going to continue to get better. So not only is the revenue going up for these programs, but the cost for these programs is also decreasing. And to kind of layer that on, we also have a bunch of money in our backlog, probably being awarded, however you want to look at that, to Rocket Lab by the end of the year. And this is more or less going to be on par with the current Space Systems margin. So it's not like we're going to take a big hit. It just seems like Rocket Lab just continues to become more and more efficient under the hood. It's just beautiful.
Yeah, that's what we like. Income's going up, costs coming down. That is a very, very interesting viewpoint.
Yeah, and I think that if that's news to you, I encourage you to listen to the Q&A section a little bit more. That's something they've asked about probably the last 4 or 5 quarters. I mean, they literally ask Adam about that all the time. Like, when are we going to see north of 30? When are we going to see north of 30? And Adam's same response is, hey, we know it's coming. We just didn't realize it would take this long, right? So I think he stated, you can correct me if I'm wrong, Scott, because I think we're addressing the same sort of question. It took 2 quarters longer than they expected, but we're now there where we're actually starting to see that legacy sort of contracts come through. And that happens with anything, like, especially if you don't have enough room or capital to feed a business. So it just goes to show you that if you do get it in a bigger conglomerate with a little bit more leeway to expand and add capital, and you're not, so capital constrained or resource constrained from a human capability perspective, you can really start to see the benefits of scale. And hopefully that continues as we manufacture more and more satellites. And I've obviously moved from specifically Rocket Lab USA to Rocket Lab Corporate and get more international sales. Hopefully the gap margins that comes down as you're able to split the overhead as well amongst a lot of the newer vessels. Obviously, if you double capacity, you're not going to immediately have the gross margin, or sure, you're not going to double the gross margin or anything like that, but there will be the ability to put, let's just say, the overhead amongst twice as many units rather than you did before. So you'll see percentage gains associated with that. And I anticipate that's what a lot of what we're seeing. And that's kind of what we're seeing with the rocket launch piece as well. Noting that they noted about 40% gross margins on the launch piece. But as you stated, Scott, there's kind of those like underlying things, and Adam talked about this on the call. There's these underlying things that you always have to pay for: the licenses, the launch fees. Regardless of whether or not you launch, you're still going to have to pay $1 million here, $1 million there to be able to hold that opportunity and get that there. So if you're able to split it amongst 5 launches versus 4 or 3 or 2, then your gross margins are obviously going to go up.
Yeah, very, very true. And I just wanted to add a segment here on why we're talking about the margins. And as we alluded to this earlier, like Rocket Lab is not an investment for everyone. Like a lot of investors are like, okay, I'm not investing in unprofitable companies. Some investors are like, it's not in the S&P 500. I'm not looking at it. So Rocket Lab is still an early company, and obviously we cannot judge the health of the business from the profits, because simply there are no profits, right? So we have to kind of see like the early signs of a good business. And for example, when Tesla had their blow up in 2019 with the Model 3 production, and they finally started making profit, and the stock price, I believe, 10x'd. And I was actually looking a lot back at that area, like what did I miss? What was the key sign, that was a giveaway that Tesla is actually doing really good under the hood? And it was really funny because it was actually the gross profits, because Tesla was losing a ton of money. But if you looked at their accounting and you looked at like GM or Ford, you could see that I don't remember, it was some time ago, but I think that GM and Ford was making about 10 to 15% gross margin on the cars, while as Tesla was making 32% gross margin, and it was industry leading. They were saying it in their earnings call. So what does that mean? That means that the cost of buying the cars, so all the metals and everything to produce the car, and then when let's say that cost them $70,000, and then they're able to sell that car for $100,000, and then the remaining $30,000 is what's left to pay Elon, pay the accountants, the lawyers, the blah blah blah. So they were not having enough volume, but the business was already working because they had a very good margin on the cars. And I see this in Rocket Lab replaying, that we are not able to judge Rocket Lab based on the profits because they don't have profits. But if you look at the early so-called business, they have really healthy margins, and the margins are going the right way, and there is a path on how they will increase. Like you see in the future, year after year, that the margins are going to be increasing and increasing and increasing because the cadence is going to go up, and then there's going to be a lot more money left over because Rocket Lab doesn't need to scale the management personnel. Like, yes, they need to scale the factory personnel that is part of the gross margin of the rockets, but you don't need 2 Muriels or 2 Peter Becks or so yeah. So I just want to say that this business, based on this report, is really, really healthy, and the underlying business is really, really going the right way. And I think that this didn't get enough attention.
Definitely. Yep. And I think I'm willing to bet that by next quarter we're going to be over the 30% gross margin threshold, and I don't think we're coming back from that. They're going to be locked into that for like going forward.
Yeah, I mean, the only thing is when Neutron comes online, because it's such a new thing. Because normally when you start the production, you're very inefficient, and yeah, and it's such a high dollar amount, right? So maybe that will eat it back into the below 30s, but we're going to see.
And that's why I want to dive deeper. Like we talked a little bit about after the earnings call, how on that fourth slide of the earnings call, we actually saw them start to break down the launch into HASTE, Neutron, Electron, and then the space systems and space components businesses. And I think that that's important because as we get into, let's say, the constellation business, the operating expenditures and gross profit of that on a quarterly basis is going to be very capital intensive initially, And then you're going to go on what Adam has talked about in the past is a CapEx holiday, where you literally don't have any capital expenditure. You literally have spent all the money pretty much. And really the only operating expenditure you have is maybe monitoring the actual progress and being able to kind of have that ability to make the flatellite actually work, whether or not what that entails. Is that doing stuff out of SOC, the Denver operations center that they have there? Like what exactly does that entail? But the anticipation is the gross margins of that are going to be massive, like on the order of 70% plus. And so it's going to be hard to be able to split the business because it's getting so extensive. And for me, it's very useful to see, like, if you then start throwing in flattellites, and the gross margin for the group goes up, that's great. But I also want to be able to track how things are tracking at the space component, the spacecraft business, because as we know at the moment, the group, inclusive of launch, gross margins are approaching 30. Well, next thing you know, they're going to start approaching, say, 40, 50%. I still want to be able to keep track of the gross margin specifically on launch, right? Are things going in the right direction still? And being able to performance manage that, to make sure that we're not taking a step back anyway.
They're probably going to break it out when Neutron comes in the picture. It's going to say like Electron haste gross profit, and then probably Neutron. I don't know. That's just a feeling. But this picture is a very good picture that shows you guys how the margins go up, because every time we look at this picture, we're trying to estimate how many flattellites they can cram onto Neutron. And either we are drinking, or every time when they post a new picture, there's more and more flattellites that we notice. So yeah, that's definitely something that we have to ask them. Mm-hmm. So give us the number. How many flattellites fit on this freaking thing?
Mm-hmm. Mm-hmm.
Okay, cool. So we got a super chat. Thank you so much, Mans on Mars. And his question is, any crazy ideas on acquisitions in the next 12 months?
I'm trying to find the comment. Somebody was saying CCM Astro. I think it was Space Ghost, or Link is what they're mentioning. I'm not too familiar with either of those. And yeah, I really don't know going forward. Yeah, it was Space Ghost.
It's so interesting because on the conference call, it seems like they're going balls deep into EU, like it's decided, mm-hmm. like their next growth phase is the EU. But I don't know any EU space companies.
Mm-hmm. Yeah, I don't know. I'm not too sure what to think. So you don't want to think like the obvious, like, Earth observation or something, but like they've been pretty explicit about not going in that direction.
I think the way I know Sir Peter Beck is like he will not say no to a good deal. Like maybe Earth observation is not a good business at a certain price, but like at a certain price you can't say no to it.
Mm-hmm.
Somebody educated me. I don't know if it was if it was on the earnings call. I want to say it was before that. I want to say it was last Rocket Lab Weekly, that there's a lot more space components businesses than you would realize in Europe. Mynaric obviously was one, and I think that obviously had synergies associated with the SDA contract. So I think that was an easy one. But I'd have to look and see what some of these other businesses do. I was actually quite surprised of how many space components businesses were actually in the UK. Granted, that was a grok answer that I asked, so it didn't come from my extensive due diligence. But yeah, I definitely think that's an avenue I need to look a little bit further into.
I'm so impressed with Grok, by the way. Like I have tested ChatGPT and Grok. Like I use ChatGPT almost every day, and I like it for what I use it for. And then like I was working on something in Excel, like 3 different tables, and then I was like, I need to mash these tables into one and like sort the data in a certain way. And I asked ChatGPT like, these are the cells that the table is in, and this is the result that I want. And then ChatGPT gave me like a formula that I can paste into Excel, and it didn't work. It was the first time, and it was the most complicated one that that I asked ChatGPT, and then I asked the same thing from Grok, and then it gave me the formula, and it was freaking working like the first time, and I was really impressed.
So helpful. Love it.
Saved me a lot of hours of work. So
Yeah, I'm seeing a comment from Curtis as well about them mentioning things on the M&A front, and they definitely did. I took a screenshot earlier today. It says within that gap spend, they reported non-recurring transaction costs of 1.4 million in Q1 due to continued corporate development activities, including advancing a robust pipeline of M&A opportunities. And I think there was something similar like that in the Q4 call. I think it was closer to 2 million. So they're still churning out some potential acquisitions, and I don't think Monarch's going to be the only. I'm not sure if it'll get finished in the year, but I bet we have at least another one, maybe two announced during the year.
Yeah, I'm definitely going to ask them if I can help with anything in Sweden. Like I'm good with permitting, and I have some connections, but not to not to space companies. But if I can help, I will do it for free. So
and awesome. Cool. I was thinking of this quote as well. Space Ghost just posted some things like Minaric, and this is from the call as well. Some things like Minaric are nice little tuck-ins that kind of bolster our vision, and then we'll look across a range of things, including much more needle-moving opportunities. So that's, I mean, yeah. If Minaric is just a little tuck-in, I wonder what they're kind of, nodding towards, and what kind of, like, because I used to be under the impression that, like, you look at their cash and like, okay, what could they buy within there and still have the runway for Neutron? But some of you guys might be familiar with Redwire, where they announced this company, and I'm like, that company to acquire is more than, I think it was like 80% of their market cap. So Redwire kind of overnight like doubled its market. What I'm saying is, like, companies can be bought that are much larger than we could anticipate, I guess. So it would be interesting. Like, what does that mean coming from? I think that was from Peter, maybe Adam. But like, what does that mean? Needle moving? Is that like, a $2 billion company, or is that,
And I'm talking probably out of my butt here, but my idea is that some companies that are stuck in Europe, because we don't have, like, some very big companies obviously list on the NASDAQ, but I think that there's a lot of companies that are like stuck on their own home exchanges, like on the German stock exchange and on the French stock exchange. And I think that they don't get the kind of capital and liquidity. So probably their price is very, very cheap compared to if they were just listed in the US. And if you're not planning to flip these companies, like buy them and sell them, but you're actually buying them for their business, it could be a really, really, really cheap acquisition compared to what you would get in the US.
I think there's a lot of runway here. You think about it. I mean, you have two main companies currently in Europe that are really, I would say, mastering space, and at least trying to get here, get further in there. You have Airbus, obviously, which produces a lot of space components and stuff as well. And then you obviously have the European Space Agency, which is using Ariane as kind of a way to kind of do that. But with that, I think there's a lot of small business, like you stated, Vince, that are like mom and pops, comparable to what we saw Rocket Lab do in the United States when it was trying to get its space components business and space systems business up and running. It's like, I feel like there's a lot of bolt-on that you say, all right, this already has a backlog for the European Space Agency. This already has a backlog for Airbus. We can help grow and not only utilize our current, use the current footprint, let's say, in Europe, but utilizing the extra space we have in some of our US factories, potentially utilize that IP and do that as well, where there's potential downtime and efficiencies to make it there. And so I think it's exactly the same sort of business model. What companies, I don't know. I'm actually seeing an interesting company, just for example, called Tails Alinea Space. And there's a joint venture between France and Italy. And they actually have about 8,900 people across 10 different countries, $2.6 billion, a bunch of different industrial sites, but they make a bunch of different satellites and satellite systems, where they have about 20 to 25% of the market share of Europe in terms of creating like weather satellites, global telecommunications satellites, and they already have about like 70 or 80 satellites in space already that utilize broadband communications, etc. And so it's like, well, if you kind of already have that avenue, is it easier to, let's say, establish your own sort of way into the telecom / broadband market, or is it easier to just acquire, right? So maybe it's not something that they acquire today. Maybe it's too expensive. $2.6 billion in revenue isn't something to sneeze at, and obviously it's larger than, say, Rocket Lab. But say you start getting a lot of the revenue from the constellation that Rocket Lab puts up in, say, 28, 2029. Maybe this is a bolt-on that you can look at maybe in the next 5 to 10 years that it's easier to just, say, buy into and retire some of the non-profitable parts of the business and really start to accelerate that European growth.
Yeah, this OneWeb as a company, it keeps coming up. That they're even struggling with government support. That's funny, because that could be, yeah, as you said, like you just acquire the spectrum, you just acquire the market, and it really adds value to them because they have cheap access to space, both on satellites and yeah. It's interesting. Definitely, I feel like we're gonna be speaking a lot about Europe and space, which is cool. If there's some interesting companies, I can go and visit them and give you guys on the ground footage.
Nice.
Cool. I think this was a very good episode. Thank you, everyone, for being here. I don't know if you guys want to say any last words before we go. Definitely stay tuned for an interview dropping with two very interesting people. That is top secret who it is, but yeah, they might.
Sorry, go ahead, Vince. Didn't mean to.
I just they might or might not be associated with Rocket Lab.
May or may not, yeah. And the thing I wanted to highlight, which we didn't necessarily dive as much into, is, and I guess the 2 questions or 3 questions I have written down personally to kind of ask. We've definitely seen our versions of or renders of the flatellite over the past 2 quarters. We'll be sending one up with Neutron to test. This question is going to be filled with kind of funny quirks, but how many different commercial launches will Neutron need to have to capture the R&D spend? Get it? Capture, because it's Neutron. Anyway, or to break even, utilizing the return on investment. How long will we need to wait for return on investment? Obviously, return on investment is the name of the boat. So there's a lot of different quirks in there. I have to get the comedic timing off for that one, otherwise it'll come across pretty flat. So I got to work on that. And then I do want to ask specifically about European hypersonics with respect to the high flight deal, the US, UK, Australia conglomerate of alliance that they signed for hypersonics in November 2024. And there's a few other parts of that question I wanted to ask. But diving deeper on that particular piece, specifically around hypersonics and everything, Golden Dome, the fact that we're still potentially in the running for that, even though everyone assumes that it's going to be a conglomerate of Anduril, Palantir, and SpaceX, and I keep seeing that on X. I don't know if that's reality or if that's like hopium that people are trying to like put out into space, but no pun intended there. But it seems like Rocket Lab is still potentially in that piece of not just particularly the Golden Dome for the United States, but obviously now potentially putting their foot in for trying to help with the defense of Europe as well. And then talking a little bit about the STA Tranche 3 as well. Like, I think a lot of people over the past few weeks with these budget cuts and the uncertainty what's going on with the Trump organization, regardless of where you stand, left or right, I think there's a lot of confusion and uncertainty, which obviously is driving people to speculate that those sorts of programs are immediately going to come into retirement or just be decommissioned altogether. It seems like, at least from a Rocket Lab perspective, they are still full-fledged on working this, which is positive. I don't know if people are catching my drift.
Awesome. So, yeah. Unless you have anything to add, Scotto, then I end here. No? Okay.
Send us your questions. That's all.
Yeah. So I mean, we can speak in the behind privately. Okay.
And if you're in Houston, we are a few of us in the community are going out tonight to celebrate one of the community members' birthdays. I'm not going to publicly disclose where we're going, but if you DM me and you are in Houston and you are interested, obviously I'm trying to vet people randomly from just showing up, potentially stabbing me. Yes, if you do happen to have an interest or you're in the Houston area, DM me on X and we can potentially meet up tonight. It is Hooters. You're right.
Hooters.
Or which Hooters?
Awesome, guys. Thank you for being here. See you guys, everyone, soon.
Thanks all.
Yeah. Ciao, ciao.